Past performance may not be indicative of future results. Therefore, no current or prospective client should assume that the future performance of any specific investment strategy, including the investments and/or investment strategies recommended and/or purchased by advisor, or product made reference to directly or indirectly, will be profitable. Different types of investment involve varying degrees of risk, and there can be no assurance that any specific investment will either be suitable or profitable for a client's investment portfolio. No client or prospective client should assume that any information presented serves as the receipt of or substitute for personalized investment advice from the advisor or any other investment professional.
Welcome to the Bullington Capital Report, hosted by Bill Bullington. For the next hour, you'll receive information on current market conditions and trends that could affect your financial future. If you have a question, you can participate in today's program by calling 216-901-0945. That's 216-901-0WHK. You can also reach Bill by going to his website, bullingtoncapital.com. And now, here's Bill Bullington.
Well, welcome back, everybody. It's good to be here. And, just wondering all the different things. I was looking at various topics for today's show, and comes back to pretty much the same thing it's always been, and that's economies are going to change because technology changes, and technology is sometimes it's ahead of demand. Oftentimes there's already demand for products that are yet to be invented. So when they get there, they sell pretty quickly, and that works out pretty well. What kind of things am I talking about? Well, basically, semiconductors, they continually get stronger, faster, more capable, and smaller. And that is not going away real soon. And actually, the way that they manufacture them has been changing, since the get-go. So there's going to be an awful lot of work in those areas. As far as, trades, very difficult. Well, I know Elon Musk's working on some robots, but it's going to be a long time before they can come out and paint your house or put a new roof on or do the plumbing. And they're not going to have the building codes for the houses that were built before 1950 in any way. But it's and the reason I'm saying this, there's so many people that they just worry all the time about, how things are going to go. And I think they're going to go pretty much the way they've always gone. You look back over the history of the country, and I look back to when I was in, elementary school, and then junior high, senior high. Things were changing pretty quickly then. Actually, in college, they were changing very quickly. And it's never not been changing. It's always been change. And that's what brings the opportunities for investments to the forefront. And that's why having funds that are run by, I like rule-based funds, but there are some, there are two types of funds in my opinion. There are those that run by rules. That's like the S&P 500, that's an index fund, or the NASDAQ 100, or the Russell 1000. All of them are very difficult to beat, by the way. But then you have other funds where the managers might go in and visit the companies, try to make some projections on what they think the company's going to do in the way of sales and what their profit margins are going to be. And they come up with these forecasts, and if the stock is far enough below what they think the value should be based on their forecast, and they'll recommend the stocks, and the rest is kind of history. That has really gone by the wayside for the most part. There are still a lot of companies out there that do it, but that's only because the industry is huge. Actually, the vast majority of companies out there are using some form of both. Take BlackRock, for example. BlackRock has the largest number of ETFs on the planet for any firm. I'm not talking about total assets under management. I'm talking about the number of funds that they have. They have more than anybody else, and there are a lot of them out there. In fact, every mutual fund company that's still around has ETFs now. Fidelity, Putnam, Vanguard, you name it. It's all over the place. So it doesn't mean that it's going to make it super easy. Actually, I think it's made it a little bit harder because if you really want to know what's in your fund, it's really difficult to find out. In fact, just take one of your funds and Google it. Google's the end-all be-all for a whole lot of research, but you cannot find the information that I was just talking about on Google. I don't know. I think that's here's a Bullington Capital conspiracy theory. They're doing that on purpose. They want to be able to charge more, and if they give more services to the companies that have that information than companies that are actually managing the money, then they can make more money, and it helps the companies that are the money managers by getting their word out there, letting people know what is going on with their funds, and it creates a job for people like me, because if I didn't do this for a living, I would hate sitting there and doing all the reading that's necessary. And I know there are a lot of people that don't think the reading is necessary. No, I get it. For the most of the time, you're probably not. You probably don't need to be reading every day. In fact, I think after about 3 or 4 years, keeping up with it's not nearly as difficult as the initial part is. But if you're in your 50s or 60s, you're getting ready to retire, and if all you really know is looking at the past performance and that's it, well, at some point in time, you're going to run into a wall, because that's kind of like, I know I've been using this analogy for years. You're probably tired of hearing about it, but if you're going to get in your car and drive to work, but you're going to look in the rearview mirror to determine where you're going, you're going to look at where you've been to see where you think you should go. I would not recommend doing that. Not in your car, not in your investments. Is it important to know? Sometimes. If you're going to back up, then yeah, you need to have the rearview mirror. But when you're trying to go forward, you need to be looking forward, not looking back. And back helps a little bit, and it's not nearly as helpful as people think it is. When you see the funds that have done better over time, the next thing you want to know is, okay, now how are they picking those and how are they managing them? And some of them are a lot more volatile than others are. And when you get close to retirement, you might want to trade off a little bit of that volatility, take some of the funds that have slightly less volatility, that still have really good returns, but because the higher the return, the higher the risk, and the risk, we're going to just call it volatility for now because that's a short-term risk, you're reducing that significantly by two things. First of all, how are they picking the stocks? That'll reduce risk fairly significantly. They're still going to fluctuate a lot. It's just that the stocks that they're picking are probably not going to go bankrupt the way that a lot of stocks did back in the mid-90s and 2000s, 2007, 2008. Those were technology just ruled everything for several years in a row. It got so far ahead of itself, the companies got so far ahead of themselves that when they came down, they were actually just slightly below where they should have been had they just gone normally and grown with the growth rates of the underlying companies. That's when we say, markets are overvalued. It's still impossible to predict, by the way. There's just no way to predict any of that. And you have to, realistically, you're going to want to hold most sectors, small, mid-cap, large cap. You're going to want to hold most things that, stocks that are growing and actually are not super overvalued. Because when you have the funds that only look at size and speed, okay, that would be the S&P 500. That's all it looks at, size and speed. Can you see how dangerous that is? It's like, it's kind of like drag racing. We just want to go as fast as we can over this quarter mile. We're going to put the big engine on there and hit it. All right. That's one way to go a quarter of a mile. Or you could just get in your car and drive a quarter of a mile. So if your goal is to drive a quarter of a mile, I'm not sure that you need all that. And you've got to train, plan, prepare. I got a quick phone call here. Somebody's coming in. I will, I'm not sure. I have to wait until somebody else picks it up for me. But if you'd like to call, the number's 216-901-0945. 216-901-0945. And yeah, by the way, if you'd want to reach out to me and have a conversation at home, while you're at home, rather, I'm in my office, or anywhere, actually, my office phone rings forward to my cell phone. I'll call you back. It shouldn't take more than 24 hours ever. And so that's one of the promises that we try to keep. And unless we've gotten deluged, which has happened actually several times this last few months. It's so weird. I thought it was supposed to get easier as you got older. It's not. But anyway, I'm going to take a real quick question here. And is this Jason Wynn or a different Jason?
It's a different Jason. Hi. Good morning, Bill. How you doing?
Good. How are you?
Good. Hey, I had a question for you.
Sure.
What are your thoughts on having a little bit of private credit in your retirement profile? And are you able to access that through Fidelity? They're doing a screen, because I mean I've used the screening tools before for different ETFs or bonds, funds, stuff, but I can't find private credit in there, and maybe it's because I'm not looking in the right area.
No, actually, it's the way the product is structured. You typically need to be an accredited investor to invest in private credit. I'm not sure what they've actually loosened those rules up somewhat over the years, but
I am, but we are. I should say my wife and I. But what I'm wondering is it available in a rollover IRA, or do you have to open like a separate account with someone, like a family office or something?
No, you can. It really depends. Each one of them is a little bit different. Because they're not listed on an exchange, they're not required to follow the exchange rules. Like the rules of they have to open up their books. They're going to get audited. They have to follow an unbelievable amount of rules for that. That's why a lot of people like to, when they go to law school, they like to major in securities law because it's very profitable.
Okay.
But it's a lot. I mean, it is mind-boggling, and there's no standard. So you've got to read each and every one of those documents for each investment that you have. And if they change over time, they can hold a vote and change. And oftentimes the company that issued the securities to begin with is the majority shareholder. So it doesn't really matter what you think anyway.
Yeah.
So those are some of the most, I don't know how to say it. They've got the least number of protections for investors because they figure that, and this is the logic of the SEC when they started putting out these rules. If somebody that gets up to $1 million in net worth or whatever the requirements are now has got to be pretty smart. So we're going to let these investments kind of go. They're not going to have to stand up to the same sort of scrutiny that we would put a company that want to be listed on a major exchange. So it's basically buyer beware.
Yeah.
And they can do whatever they want to do, by the way. And that's one of the reasons I just stopped. I mean, because you have to read those documents from beginning to end, and I know you've seen how long they are, and all the language that it comes in it. And
what I was wondering was, if you're looking at investing in private equity, you have some options with like going with a larger company like Blackstone or KKR and let them pick the individual companies that they want to invest in, and you're getting exposure that way. Is there something similar with the private credit then?
Yeah, there are lots of private credit funds out there, and it's the same thing. They're just looking at the credit instead of equity in the companies, and instead of investing in company stock, they're basically loaning them money.
Like bonds, basically bonds
Right.
to private companies, right?
Yep. Yeah.
Okay.
So that's a way above the average person's pay grade in my field. That's something that normally people do if they really have a lot of money. They are coming down in marketing though, because it's unbelievable how many people now have $1 million in their 401k plan. And so that back when I was taking the test and all that did not exist. I mean, there were no 401. Well, the percentage of 401k millionaires were just less than 1%.
Did they lower it to $1 million, or was it $1.5 million?
I am not sure because it's been so long. So I just stopped looking at those since they're so difficult. I mean, you're going to spend the better part of a day reading the document, the offering memorandum.
Yeah, I would be nervous about going into an individual company, just like an individual stock. But I hadn't heard of any funds that have private credit or private. I know the private equity name, but I didn't know the private credit name.
Yeah, there are quite a few of them actually. And,
can you screen for them like with Fidelity's screening tool?
Not with Fidelity's. You'd probably have to go to the SEC's website. And,
okay.
And more than likely you would need to know the name of the company and have some information on the offering. So.
Okay. All right. Well, that's all I had today, Bill. Thanks. I always listen. I appreciate everything you have to offer on your show.
Well, I appreciate your comment. Have a good rest of the weekend.
You too.
Thank you. Bye. I've got to take a real quick commercial break right now. This is Bill Bullington right here on 1420. I'll be back after these messages.
Make it count, leave a mark, build a name for yourself. Dream your dreams, chase your heart above all else. Make a name the world remembers.
Cleveland's got guts.
And the Indians.
As well as the Browns and Cavaliers.
And the Rock and Roll Hall of Fame.
And a downright awesome downtown with a Wallacadoodle-worthy waterfront.
But what's even in our water? Like a Lake Erie martini with more chlorine than a swimming pool?
Now, I'm a guy, and I've lived here all my life. Neither hard water nor chlorine bother me a bit.
Well, I had Wyatt Works put in a whole home water filtration system. It tastes better, and showering is so much better. My hair washes clean and stays healthier.
And I've got a regular old water heater.
And I've got tankless for endless hot water.
So what's our point?
Our point is, Wyatt Works is Cleveland's answer for water heaters.
Well, if you're a regular guy and just want same-day water heater service, Wyatt Works does that.
And if you want a water softener or a filtration system and want to go tankless, we do that too.
So get your water
Wallacadoodled
with Wyatt Works.
Consider it done at WyattWorks.com. License number 30185.
Exclusive interviews, bold commentary, and behind-the-scenes insights into stories that the mainstream media won't cover. It's the Unshaken and Unafraid podcast with Joe Pags on the Salem Podcast Network.
You guys know better than anybody that you just can't compete on an equal level playing field with somebody of the opposite gender. It's just not fair. That's a fact.
Subscribe today on Apple, Spotify, YouTube, Rumble, or at SalemPodcastNetwork.com.
No doubt about it, we're spending more time at home, which is the perfect time to make it more functional and beautiful. Hi, Ed Flash Ferentz here for Artistic Renovations, Northeast Ohio's premier and award-winning remodeler. Artistic did a fantastic job with our kitchen in 2016, and last year, they were back for the master bath. Oh, my word. Do yourself a favor and go to artisticreno.com. Believe me, you'll love their ideas and without question the finished product. For a virtual consultation, call 216-520-0838 or visit artisticreno.com.
You've heard the saying, all good things come to an end. Well, not always. Sometimes they just take a break. That's what's happening with Our Lady of the Wayside's car donation program after 24 years and 96,000 rides donated. Pretty amazing. Here's the story. The car lot's owners sold the property, making it impossible for car donations to be accepted at this time. According to the Wayside CEO, Terry Davis, the next right steps will be determined and communicated soon, so stay tuned. In the meantime, Terry and the entire team at the Wayside thank you for your continued support of the 450 individuals with developmental disabilities in the Wayside's care. And please take note, you can still support them by making a donation at thewayside.org. Thinking about updating your home? Well, Joyce Factory Direct specializes in replacing old, outdated windows. Proudly made right here in Cleveland, Joyce Windows features their exclusive Smart Shield high-performance glass, which means you'll be getting the most energy-efficient windows for your home directly from the factory. Customers just love how much warmer their house is and how easy their new windows operate and clean. Right now, you can save 50% on all installations. Just call to schedule a free consultation with on-the-spot pricing, 440-243-5700, or visit JoyceFactoryDirect.com.
Welcome back. This is Bill Bullington. I'm here every Saturday morning from 11 to noon. You can call us if you'd like to ask a question. Number is 216-901-0945. And if you want to, I think the music is still on. You can call us at the office to 330-664-0700, 330-664-0700. And so it's very nice of the guy to call and have the question. And one of the things I did want to talk about is, people get really upset. And the media, they are masterminds at getting people's attention, and to get their attention, it's bad news. Bad news sells more than good news does. And the good news very rarely gets much attention. And those guys need to get together and get better public relations teams. But anyway, there's a lot of stuff that's going on. Just a normal change. I mean, the change from gas to electric, and not just in your car. I mean, the water heaters now, they give you a choice, and electric water heaters are very, and I just pulled that out of the back of my brain because I was reading about it a few weeks ago, looking at my water heater going, I wonder when this thing's going to go. Because I've had to replace it once already, and that was actually a while ago. I'm amazed at how well those things work, by the way. But the next one's probably going to be electric, and we're probably going to continue to go over to more and more electric. And how many kindergartners do you see that know how to use a cell phone? I think it's mind-boggling that these kids can do what they can do. And anyway, so the bottom line is the demand for electricity is going to be here for a long time. It's going to continue to go higher each year. Population grows each year. Every single one of those kids that goes to school wants a laptop and tablet and desktops. So cars are becoming more and more electric. So what I'm trying to get, the point I'm trying to get across here, it's very easy to get a little upset, a little depressed when you look at the news and when you're thinking of trying to put it together with what's going to happen in financial markets. Well, you know what? The correlation between the economy and financial markets is abysmal. The market will run up when there's no good reason, and then the market will crash on good news. I've seen it a million times, and it's why I stopped trying to forecast. And I can't tell you how much time I put into that, how many books I read, how many classes I went to. I majored in actually economics. I minored in finance in college. And I think it's harder today than it was back then. There were actually some things that actually worked for a while, and then of course, things changed, and that changed. So trying to forecast. If you're going to forecast, this is what I do. I look out over the next 10 years. I look at where valuations are right now and where they've been in the long run. You have to make some sort of estimate of what you think interest rates might do, and who knows 10 years from now. And that's my point. 10 years from now, you're probably not going to know. But if your investments are attuned to what's going on in the market, if they're making adjustments, you won't even see it. It's going on behind the scenes. And the algorithms that they're using, the mathematical formulas that they're using to manage that money are going to have a big impact on what the returns are. And everybody, by the way, is different. And incidentally, this is one of those things where the funds that have the highest volatilities typically also have the highest returns. So that's part of the price you pay. If you want above average performance, you're going to get above average fluctuation. You just cannot separate those two things. And my entire career I've been talking about that the last 30 some odd years. And I still get that question. But you know what? A lot of people that are asking today, 30 years ago, they were in their 20s, or maybe in their 30s. And a lot of the stuff wasn't really around. And today they still just look at what just went up the most. And they don't even realize that that's what they're doing, which I think is kind of funny. And they'll say, oh, no, this is the 3-5 year. Let me tell you something. Get a calculator out. Go add up 1% a year for 9 years, and then go 200%, or no, go 150% on the 10th year. Okay, and then get a calculator out and look at what the average annual return is there. It's going to be horribly misleading. That's my point. I think I have a phone call coming in here too. And if you'd like to call, the number is 216-901-0945. You can call me in the office, by the way, 330-664-0700, 330-664-0700, and that's Bullington Capital. Or you can just email me, bill@bullingtoncapital.com. I'd be glad to try to take your questions and see if I can help you answer them. I know it's difficult, especially today. There's so many more sources of news available, and I think my generation had a big advantage. There were still a lot of sources, okay? Nowhere near the sources that you have today. And a lot of the stuff that is out there is not that helpful. So you end up getting these really small pieces of the total puzzle, and it takes a long time because these guys are getting paid per click. The more they can keep your eyes on that screen, the more money that article makes, and the more money the people who are the other advertisers are paying, and it's about money. And so if you're a talented writer and you have some background in finance, I would say, it's very difficult to get the really big jobs, but you could get a pretty decent job, or you might even just start your own blog or whatever. But the opportunities are there, and I remember thinking back when they first started talking about the internet, and this was back when I think Case had a free internet service. Yeah, they did. And they had a chat room too, which I thought was hilarious. So you should have seen that. That was before there were very many rules out there. My guy came on one day, and I typed, "Hands up, computer police. I'm checking all your hard drives for pirated information." And pirating was using someone else's software, because they used to sell disks that you'd have to install the software with, and it didn't count how many times it was installed. So a lot of those things would get pirated away. Somebody made a copy of it and gave it to one of their friends or whatever. So it was hilarious. There's like 50 people in this chat room, and I put that message out there: "Hands up, computer police! I'm checking all your hard drives for pirated software." And in about 90 seconds, I was the only one in that chat room. Everybody else had signed out of it. So it was that's kind of funny. At least I thought it was funny. But that's one of the things about doing a radio program. When you're in the studio, you're by yourself. So when I'm laughing, I'm not really sure if anybody else is laughing. But that's okay. I've been doing this for so long, it doesn't really matter anyway. And but one of the things that I was always met with obsternation, and people were just questioning what I was saying, and I'm like, no, just read. If you read Barron's, pick up a Wall Street Journal. You sign up to. I get mine all digital now. Look at the things that are going on around you. Look at the products that they have in Walmart and Costco. It's mind-boggling the amount of technology that you can get, at an everyday store, and it just blows my mind. We're not anywhere near where we're going to be. We're actually going to have to generate a lot more energy than we're doing right now, and that's good. But people say, yeah, but I can't. Not everybody's going to be able to work in that industry. Well, they don't have to, you see, because the people that are working in that industry, they eat food, they wear clothing, they live in housing, they drive cars, and brush their teeth, hopefully. So you've got all these products, everything that are being supported by those people that have those jobs. I mean, when I was growing up in this area, the really good jobs were for Ford, Chrysler, and General Motors. Those were the really good jobs. You go into a factory and put in your hours and get paid a really large sum. And that's gone away for a large portion of people. And so there's not nearly as many people working there for tons of different reasons. And the people that work there now don't do the same jobs that they did back then. And a lot of the people that are working there are just keeping the machines running, the machines that are doing the work. So, and there's still a lot of physical labor. The robotics is moving in there, but the robots break down, and somebody's got to fix them. Somebody's got to do the maintenance on them. Somebody's got to know how to, design the new robot for the new car, because Elon Musk decided to change the body style of his cars, or Ford, or any of the other manufacturers. So I guess the bottom line is that there's going to be change, and I talk a lot about those industries because growing up around this area, automotive and steel, it was a big deal. It was probably 30 or 40% of the total economy. And if you look at all the spending that they did and the people that worked there and the spending that they did, it affected all the other industries and sectors. So where's that coming from in the future? Well, it's coming from AI. It's coming from the internet. Programmers, videographers. It's mind-boggling how many pages are being created every hour. I haven't looked that stat up in a long time, because the last time I did, I was so flabbergasted. I was like, wow, how on earth is that possible? Well, it's because you probably have a lot of kids out there who've been typing since before they got in kindergarten, and they can type as fast as I'm speaking right now. And they can put that stuff up there lickety-split. But it's really interesting, though. I mean, it is fascinating to see all the changes that are happening and will continue to happen. I know it's tiring sometimes, especially if you're caught up in the middle of it. My industry's kind of, because we use a lot of technology. And it's pretty rough. I would not want to be a surgeon because their stuff is changing every day. Or just the whole medical industry. They keep finding new things and trying to automate as much as they can in and out of the hospitals. They're each year the instruments that they're using improve a little bit. Most years it improves a little bit, and so that's a really big growth area. Just heck, everything's growing. I mean, look at hotels. There are hotel chains all over the country. I remember when the first company came out that was going to put a massive software package together where they could actually book hotels that were owned by different chains. And now that's, old hat. Look at Expedia. It's just anyway. So I'm really showing my age here, but but my point is that the economy is not going to come to a halt anytime soon. It's always been a bumpy ride. It's never not been. Well, I take it back. It's kind of like flying a plane through a storm, or actually through a tornado. On the tornadoes on the edges are very rough, and if they're big enough, you fly through that, and in the middle, the air is calm. And then you get to the other side, and it starts to get rough again. And a lot of the hopefully, if you see the storm coming, you can actually go around it. But if not, you're going to have to go through it. And they've learned how to do that, and they do it all the time. So when we come back, we'll talk a little bit more about some things that you can do to help when the next economic storm rises. What kind of things do better? What kind of tactics should you do? Because you don't use the same tactics in smooth air as you would use in rough air. And it's the same thing with the stock market. And I'll be right back after these commercial messages.
This is the story of a runaway with no way home and no way out.
All right, hey friends, Bob France here for the good folks at the Buff, Harry Buffalo, Great Northern Boulevard in North Olmsted. When's the last time you stopped in Harry Buffalo? If it's been a little while, you don't know what you have been missing. They have added so many phenomenal things, including the new lunch special, Monday through Friday, 11 a.m. to 2. You get your choice, 2 soups, salads, and sandwiches. You pick, all just $10. Now, that's the lunch special. They also have the happy hour specials, and that's my favorite. Weekdays from 4 to 7, a new food special every day of the week, wing day, burger day, pizza day, all kinds of great options for you. You can check them out online at harrybuffalo.com. As a matter of fact, while you're there, join the herd, get a free appetizer on your next visit. Take a look at the menu, whet your appetite just a little bit, and head on out. By the way, if you're looking for something after work, great drink specials and happy hour too. $3 for craft pints, domestic talls, well drinks, and house wines. $3 domestic pints all day. So whether it's lunchtime or happy hour time or dinner time, doesn't matter. It's a great time when it's Harry Buffalo time on Great Northern Boulevard in North Olmsted.
Do you ever find yourself saying, I need a vacation? Vacation Fixation can help. At Vacation Fixation, we specialize in all-inclusive trips and cruises to Mexico, the Caribbean, and Disney vacations. Why choose us? Our clients book through Vacation Fixation because they are frustrated with online trip brokers and timeshare scams. Whether it's a weekend getaway, a family trip, spring break, or honeymoon, Vacation Fixation will personalize a trip just for you. Want to know the hottest destinations in Cancun, Punta Cana, Jamaica, or Puerto Vallarta? Interested in room upgrades, beach reviews, or details about resort restaurants? How about finding a trip with a direct flight? At Vacation Fixation, we take all of your specific travel requests and shop our suppliers to find the best deal. What's the cost? Our suppliers pay us so you don't have to. Call 330-573-8147 for more details. Or you can visit our website at vacationfixation.com or check out the deal of the day on Facebook. Vacation Fixation.
Is it finally time to update your bathroom? Bath Planet, a division of Joyce Factory Direct, specializes in replacing and converting old showers and tubs into new, beautiful bathrooms in as little as one day. We have transformed thousands of bathrooms just like yours into a spa-like oasis that has homeowners excited to use their new bathtub or shower. Right now, all bath installations are 50% off. So call to schedule a free consultation with on-the-spot pricing. 440-243-5700 or visit joycefactorydirect.com.
Welcome back. This is Bill Bullington. I'm here every Saturday morning from 11 to noon, right here on 1420. Hope if you guys have any questions for me and you didn't get to call in, the number is 216-901-0945. You can also go to my website, Bullington Capital Management, and 330-664-0700 is the number. 330-664-0700. We'll try to answer any questions that you have. And I'm going to go right now to Scott. Scott, you have a question for me?
Hello, Bill. I have a question. You were talking about Elon Musk and electric vehicles and all in the context of money, and I think I need a new vehicle. So I think I can buy a new vehicle on the cheap. So let me hear what you think. So if Elon Musk is coming out with a Tesla 2 around $10K, and I can get a $7,500 tax credit, could I theoretically buy the vehicle for $2,500?
In theory, if that's exactly how it worked, yes, the answer would be yes. But the devil is in the details, and you can bet there's going to be a lot of fine print in all that stuff. And I wouldn't even venture a guess at this point, because I've seen so many things happen. It never happens the way that we want it to, And so it's one more situation where, an awful lot of people are probably they're hearing the highlights that the news media wants you to hear. And then when you find out what the actual whole story is, everybody's disappointed.
Yeah. Well, I know the tax credit for the electric vehicles goes away at the end of next month. Is that right? I think it's the end of September. The $7,500 tax credit goes away for the vehicles, electric vehicles.
Yeah, you know what? We're actually, as an RIA, I'm prohibited from giving tax advice. Yeah, you actually have to have a professional taxpayer identification number, tax preparer identification number.
Sure.
And
okay.
So that's actually a whole other occupation. And I just listen to my tax preparer. I ask questions and just write the checks and then cry a little bit.
Well, I just thought I'd give it a shot and see what you think. I was just thinking about that the other day, and I was thinking of all the different tax changes and all the new, just like you always talk about, all the new things that come out nowadays and how to take advantage of it to get your biggest bang for the buck.
Yep. One good I think something that could help a lot of people that are listening is whenever you start looking into something, look into that one thing. Like this, I would look at just tax credits on automobiles, because you can get so lost so quickly if you get on Google and you're not pretty succinct with your description of what you're looking for. And even then, it's going to be very difficult to stay on track.
Yeah.
There's just so much material out there. It's just mind-boggling. So.
Okay. Well, thanks, Bill. Great show.
Oh,
really
thanks.
appreciate it.
Oh, I appreciate you calling.
Take care.
Yep. Have a good weekend.
Bye-bye.
Yeah, that's it's great to have access to all this information, but there's that overwhelming feeling that most of you probably get or should get because it is overwhelming, and it's what keeps me employed, actually. And, I feel it's so funny. It's not necessary that you know all the answers. You just have to know where to look up the answers. That was one thing. I went to Kent State, and our library at Kent State was huge. It was the tallest building on campus, and it wasn't. I'm not sure if it was actually the biggest, but it was the tallest, and it was one of the tallest buildings in the state for all the other colleges. There would always be other graduate students there doing research, and I thought that was pretty interesting. But the bottom line was, despite the fact that all that information was there, finding it was another thing altogether. And this is back, before, I think they had desktop computers, and they were just coming out with, they didn't call them laptops, they called them personal computers or portable computers, and they were huge. I remember getting one when I got my second job out of college. I got a portable computer. I think it weighed about 16 pounds, and the screen on it was only about 4 inches, and it was a liquid crystal display. Most people have no idea what that is now. And I remember hooking it up. You could put it on just a regular phone, and it made all these really loud noises. And then it would hook up. And I went into Goodyear in Akron. I'm in there, the home office, and I'm with the head of marketing. And I show them. I go, hey, listen. Not only can my magazine went out to government buyers, so buyers, planners, specifiers. You got to have all three of those guys when you're selling to the government, and it's a big process. And we were one of two or three. We were the only magazine that actually went out to federal as well as state and local. And anyway, so when they started making this stuff available, I got my company to pay for the class I needed to take to learn how to use the internet before the internet was here. Okay, it was pre-internet days, so they didn't have Yahoo. You had to buy this catalog that was about 3 inches thick. It was a binder, and you would try to look up and see if there was a website address that dealt with the topic that you were looking for. Talk about nuts. And anyway, so I thought it was pretty cool. And I got the United States government's purchasing arm where they would go and give requests for proposals. And I went in and I showed the guys at Goodyear. I said, hey, look, when the military goes to buy tires, they're putting these bids out on this website. And they said, what's a website? Well, let me show you. I hooked it up, showed them, printed out some leads for him, handed them to the guy. And none of this, by the way, had anything to do with the magazine that I was selling ad space in, but because I was up there, and we had the most accurate mailing lists. If you're looking to reach those guys, at least that's what we used to tell people. I thought it was true, and I'm pretty sure it was. But we had some competitors out there who'd probably get really upset hearing that. But bottom line was, I went in and I showed these guys, hey, you can actually see which military bases, which police car, where they're taking care of the garages, where they take care of the police cars, fire stations. You want to reach all these guys? Just look up. They had these things called SIC codes back in those days. I don't know if they still use those or not. But anyway, I showed them how to look for the request for proposals and how that could work with the magazine that I was representing. And it was hilarious because these guys that I worked with, nobody knew anything about computers because they just weren't really a thing at that point in time. Probably where electric cars were 5 years ago. Everybody knew, or maybe 10 years ago, people knew of electric cars, but there weren't a whole lot on the road and they weren't that popular. That's how personal computers with modems were. Now everybody hooks up wirelessly. Anyway, make a long story short, I showed these guys and they were so happy. I got this huge order for an ad, and they took up a bunch of space in the magazine. And it worked out very well. But at the same time, I was thinking to myself, this magazine is toast. You don't need us anymore. And you know what? It was the whole magazine industry, by the way, especially business to business. The internet just put an end to that almost. And some of them are still around. And a lot of magazines are really good. You go to Barnes & Noble, the section's nowhere near the size it used to be because there just aren't that many that are still there. But there are, it's probably in the thousands, a couple thousand. But, back in the day, they were just everywhere in every topic you could think of. So that's changed. Because you can actually access all this stuff, now you have to have a website and, all that kind of stuff. But which means the demand for computers and electricity has picked up all the slack that the magazines used to fill that role. And that's the thing about an economy like ours. That's why this is not going to fail. I hear that crap all over, and it's some Yahoo that's trying to sell you something, that's trying to scare you, that you better get this really quickly. No, probably not. It's not all that urgent. There are some things like when you're doing fixed annuities, and I wanted to talk a little bit about that because they're actually paying a couple % more than CDs are or treasuries. And if the money's sitting around and you're not using it, you're just reinvesting it. That money could be reinvested on a tax-deferred basis, so you wouldn't have to claim the income and pay taxes on it when you're not using it. You don't claim the income until you actually take it out, and that's pretty cool. And if you had money elsewhere, you didn't want to have to pay taxes on that, you could just leave it there, let it continue to compound, and take the money from someplace else. If, let's say, you have a brokerage account and some of the stocks or the funds are slightly lower than they were when you bought them because you bought them last year sometime, you would actually be able to sell those shares while they're down, so you're actually going to get to take a loss. And if it goes over the 3,000, you get to carry that forward. And that's a lot better than taking the money out of the annuity and paying taxes on it. or the income that you got from a treasury bond or a CD. So just a thought. And when, by the way, with financial planning, there is no one financial plan. There's not even one for everybody. Because I'm telling you, a husband and wife will disagree more than anybody sometimes on what they want to do with their money. And it's a big issue in most marriages. The ones that seem to get it right are one person just doesn't have any interest in it, and the other one just runs it. that seems to be the most common. My wish for them would be that you would just know just enough so that you don't have to spend all your time trying to keep up, but you'd understand the basic language. You'd understand that, hey, if you take out more than 4 or 5% a year from your stock accounts and the market has a really rough time period, the way it's done multiple times during my lifetime, that could be a problem. So you want to make sure that you are really paying close attention, especially when you're getting close to retirement. When you're starting to take that money out for retirement, that's going to last the rest of your life. You take out too much too quickly, or you have too much in the stock market, it goes down, you still have, when the stock market goes down, the utility companies aren't going to say, it's okay, just pay us when the market goes back up again. That ain't happening. So you've got to, sorry for all the antics today, but anyway, I didn't get enough sleep last night. But if you get enough sleep and you want to call and you want to set up an appointment, it's 216-901-0945, or you can go to bullingtoncapital.com. That's my website, and I will be glad to try to help you in any way that I can. I'm going to talk a little bit more next week about some specific portfolios that I really like. I just started using them. They're a little bit different than, not a lot actually, but they're a little bit different than the ones I had been using prior to this point. And I just started them a couple months ago. So it's pretty new. But I recognized what they were doing, and I was like, oh, wow, hey, that's actually a pretty good idea. And will it make a big difference? I don't know, probably a 1 or 2%, which a lot of people look at that and go, well, that's not a whole lot. No, it's actually a lot. So I'll talk more about that next week when I come back. In the meantime, hope you guys all have a good week. Good luck. This is Bill Bullington right here on 1420. I'll see you next Saturday morning at 11.
You just caught another edition of the Bullington Capital Report, broadcasting every Saturday at 11 a.m. on AM 1420, The Answer. If you have a question and you'd like to speak to Bill personally, you can call him at 330-664-0700. That's 330-664-0700. Or online at bullingtoncapital.com. That's bullingtoncapital.com.
The preceding program has been paid for by Bullington Capital Management, LLC.